Hi. Okay, in chapter 3, we calculated gross income. In chapter 4, we're going to address certain what are called above the line adjustments, which bring us to AGI, the adjusted gross income. And AGI leads us right into calculating our taxable income and tax due. You'll notice that each of the learning objectives in here, 1 through 9, yeah, it's a lot, each one discusses the deductions. But first, I thought we'd take a look at Schedule 1, Part 2, because this is where the numbers go. So we've got educator expenses, certain business expenses for reservists, performing artists, and such, HSAs, moving expenses for active duty armed forces, and so forth. So each one of these is an adjustment to income. Learning objective number 1, let me go back here. Describe the tax rules for student loan interest. In 2020, interest paid on higher education loans was deductible up to $2,500. It's designed, however, for the benefit of low and middle income taxpayers, so there are income limits. The limits are based on modified adjusted gross, MAGI, modified adjusted gross income. This is, for most people, similar, if not the same, as AGI, and based on AGI with certain deductions added back. Attention must be paid to the particular definitions of expenses and education programs. Learning objective number 2 deals with HSAs, health savings accounts, and the deduction for that. HSAs are tax-exempt savings accounts for qualified medical expenses. For individual coverage maximum, the aggregate contribution an individual under 55 can make to an HSA is $3,550. For family coverage with a contributor under 55, the maximum aggregate annual contribution is $7,000. If the taxpayer is 55 or over, he or she may contribute an additional $1,000 in 2020. Learning objective number 3 has to do with the military, and specifically active military personnel, because they can deduct unreimbursed moving expenses when it's related to a permanent change of station. Any excess of reimbursement over actual expenses, however, must be included in wages on Schedule 1 of the 1040. That's Part 1, if not included in the W-2. Learning objective number 4 deals with the deduction for half of self-employment taxes. Self-employed individuals are required to pay both the employer and the employee versions of FICA. The self-employed individual is permitted to deduct 50% of the self-employer's tax, representing what would be the employer's portion of FICA, Social Security, and Medicare. Learning objective number 5, many employees receive subsidized health insurance coverage as an employment benefit. To encourage self-employed individuals to purchase health insurance, and that's been a big thing, getting people to take on insurance, Congress enacted the self-employed health insurance deduction. There are 2 exceptions to this. 1, if the self-employed individual is eligible to participate in a subsidized health insurance plan, that special deduction is disallowed. So, for example, if a person has a full-time salaried job with one company, but they're working on their own on the side, they can't have both. And number 2, it cannot exceed the earned income producing a loss. Learning objective number 6, penalty on early withdrawal of savings. Some of you who may have CDs or time savings accounts know that normally you incur an interest penalty if you take the money out early before it actually matures. If a taxpayer incurs an early withdrawal of savings penalty, the taxpayer is entitled to report the penalty as a 4 AGI deduction on line 17 of the Schedule 1. Learning objective number 7, for those of you who are divorced, has to do with alimony paid. As a result of the Tax Cuts and Jobs Act of 2017, and you kind of should notice by now, since Chapter 1, that it would be important for you to read the Tax Cuts and Jobs Act of 2017 because it affected so many different aspects of personal income tax. Beginning in 2019, according to that act, alimony is no longer deductible by the payer spouse nor reportable as income by the recipient spouse. This rule only applies to divorce or separation agreements executed after December 31st, 2018, and also affects those agreements executed on or before December 31st, 2018, but modified after that date. For those agreements that were executed on or before December 31st, 2018, and were not subsequently modified, the respective parties will still be able to deduct the payments and be required to include the payments in income until such time as the agreements expire. Be careful to read this one very, very carefully because there are a lot of subtle rules that affect the calculations. Learning objective number 8, this is one for me. Educator expenses. So eligible educators can deduct up to $250 of qualified education expenses for AGI deduction. If the taxpayer's filing status is married filing jointly, and both individuals are eligible educators, the maximum deduction is obviously twice $250 or $500, with each individual taking into account only his or her expenses for purposes of the $250 maximum per individual. So you can't share it. The $250 deduction is measured in terms of the expenses paid during the calendar year, not the school year, because typically a school year runs from September through June. Learning objective number 9, tuition and fees deduction. Taxpayers may be eligible to take a 4 AGI deduction for qualified tuition and related expenses paid during 2020 for the taxpayer, taxpayer's spouse, or a dependent. The deduction is a maximum of $4,000, but can be smaller if the modified AGI, that's the MAGI we were talking about before, of the taxpayer exceeds certain limits. So again, we see that modified adjusted gross income is used in a lot of different places to determine whether or not you're eligible. Payments must be to a qualified educational institution and must be for a student taking one or more courses at that institution. Taxpayers cannot claim a deduction for tuition paid for elementary or secondary school education. Taxpayers must attach Form 8917 when claiming that deduction. So you have a form to fill out that's separate for that particular piece. Number 2, only tuition and related expenses qualify. Related expenses are fees related to an individual's academic course of instruction. These would include course-related books, supplies, and equipment, but only if the school requires the payment as a condition of enrollment or attendance. Student activity fees, athletic fees, insurance, or other expenses related to academic instruction do not qualify. So that takes care of Chapter 4. Again, I've been getting lots of emails. I appreciate that. Text messages. Let's keep the communication open. Got an interesting discussion topic this week. Jump on that as well. And I'll see you next week. Bye.